Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena. This is the show where we take you through all the counters that are buzzing in trade, either on the back of news flow or on the back of technical charts. But let's first up take stock of how the markets are shaping up. I mean, look at the decline on Nifty. I mean, at one point we did think, there is recovery coming in, but it has given up all those gains. In fact, we are below 23,200 levels now, sitting at, with cuts of 1%, we are down. We are at 23,173 levels on the Nifty. Nifty Bank also following suit, painting a very similar picture. We did see a little bit of recovery coming in midday, but then it has given up all those gains. We are sitting with cuts of almost 539 points on the Nifty Bank as well. Sectorally speaking, also all the sectors are in the red. Realty facing a lot of selling pressure, down almost 4% in trade. From the IT pack though, IT pack is still managing to hold some bit of a fort there, with cuts of 0.5%, and TCS and Infosys are really holding out in the green. In fact, TCS has been doing pretty well after the results came out, after those positive commentary coming in from TCS management. TCS has been in focus. It is still holding on in a somber market like this with gains of 1%. Other counters that are really in focus today are the crude sensitive stocks, with the elevation of crude prices that is above $81 a barrel right now, because of the news coming in, US cutting supplies from Russia. Crude is elevated on the back of that. Crude sensitive stocks like the oil marketing companies HPCL, BPCL, they are in focus. Interglobe Aviation is trading with cuts of 4.8%. On the back of that, all the tire stocks are in focus. The paint stocks like Asian Paints, Berger Paints, all of them tend to face margin pressure if the crude oil remains elevated, as crude is a major raw material which accounts for almost 55 to 60% of input costs for all the paint companies. So the paint companies are in focus there. Asian Paints is trading with cuts of 2.2%, and so is Berger Paints. So all oil sensitive companies are facing selling pressure in this market. In fact, if you look at the Nifty also, there are hardly any counters, barring 5 counters. All the other Nifty counters are trading in the red, and market the breadth is also negative, with most of the constituents in the favor of declines, and the greater cut is coming in, a greater blowout is coming in the broader markets, which has actually ticked downwards. It was down almost 2% in the morning. Now it is trading with cuts of mid caps, small caps, both trading with cuts of over 3%. So a sharper selling, we can witness sharper selling in the broader markets, mid cap and small cap. So largely, it's a somber Monday coming in for this week as far as the markets are concerned for now. But let's get on board our technical analyst, Aditya Agarwala, who's the head of research and investment, Invest4Edu, who's joining us on the technicals. And from our research team, we are joined by Ria. Hi, good afternoon to the both of you. Thank you so much for joining us. Let's get started with all the stocks that are in focus today. Aditya, you picked out Polycab for us. Tell us, what are you penciling in on the charts for this counter? In this market, of course, we can see it declining 2%. But in the last, last 1 month also, it has seen a sharp correction of almost 16%. From here on, do you see a further breakdown, or do you see a reversal coming in on Polycab?
Hi Ankita, thanks for the show. Good afternoon. Oh yes, definitely. So I see a fresh breakdown on Polycab. In fact, it's broken down from a trendline support, which also happens to be the 200 DMS. Overall, the chart setup does look weak at the moment, and there are multiple support areas from which it has broken down. So I think stock can further correct from here on and test levels of at least 5,900 on the downside with the 6,000 support immediate one. So if you are short on the stock, continue to hold the short positions for a target of 6,000 to about 5,900. If you're already long on the stock and don't know what to do, maybe place a stop loss just around 6,300, and if 6,300 is broken on the downside, you should look to exit the stock. Because then the weakness further accentuates and then can drag the stock all the way down to 5,900. Plus, if I plot a couple of technical indicators like an MACD or an RSI, they too have swiftly moved into the bear territory, which clearly tells that the bears are dominating the stock at the moment. So it's better to stay away, or rather short your positions for a target of 6,000 to about 5,900.
All right, so that's what Aditya pencils in for Polycab. But moving on to another buzzer in trade, which is Biocon, which is doing well on the back of course, the US FDA approval and a note from BOFA. But to take us through the details of that, we're joined by Ria. Hi, Ria. Tell us, what's the news on Biocon? What is this approval, and what does the brokerage note say?
Well, yes, Biocon has been in focus today because the US FDA has classified Biocon Biologics site in Malaysia as voluntary action indicated or VAI. Now, this inspection was conducted between the 15th to 27th of September 2024, and the inspection concluded with the issuance of a Form 483 with observations broadly categorized as five observations across the drug substance and drug product facilities and 3 observations on the analytical and microbiological quality control laboratory. Now, BOFA has also come out with a note on Biocon on the back of this. They've maintained their buy rating, and the target price has been revised to rupees 435 versus rupees 400 earlier. They've said that the facility clearance paves the way for launches, and the Bangalore and Malaysia facility clearances are going to increase confidence on the upcoming biosimilar launch pipeline as well. Now, Biologics revenue is also going to improve from $1 billion in H1 of FY25 to $1.2 billion in FY26, and they've increased their target multiple to 15x EV by EBITDA versus just about 13.5x earlier. On the back of this, Biocon is up just about 1.5% as we speak.
All right, Biocon holding on to these gains in this market on the back of that news flow. But during our on-the-go Bengaluru edition, we also caught up with Biocon Biologics MD and CEO Shreyas Tambe at the company's sprawling Bengaluru facility, where he shared his insight into the US FDA insulin products approval and the new product pipeline for Biocon. Let's go across and listen in to that slice of the conversation.
We are bringing the Yesintech product to the US in the first quarter of next year, which is very, very exciting for us. It's a global launch because this month we got an approval from the European authorities, and we'll be looking to launch that product in Europe also shortly. So this product will get global launch in the next few months. So it's not too far out. We will be in the first wave of products in the US. In October, we got an approval for our insulins. And now most recently, we've got approval on this site for all our products, including Yesintech that you talked about, which will now move forward. So FDA is an ongoing process. We work very closely with all regulators, not just the US, but also with the European authorities, Health Canada. We also work closely with TGA in Australia, Cofepris, also with Anvisa in Brazil. So I think we are a global company which works very closely with regulators around the world, because we make one product, one quality, because we don't think that you can differentially value life. The way we are slated, a company which has 5 new products launching in the US in the next 15 to 18 months and 3 new products across the world, I think should really be aiming high. And I think we are very excited about the opportunity ahead of us, and we believe that that puts us in a very unique position. Not just that the products that we've got have over a fourth or a fifth of the market that it operates in, but it also has huge new products that are coming in that will drive growth ahead. So not only are we excited about what we have, but we are very excited about what's to come.
All right, moving on then from Biocon that is in focus today. That was the management of Biocon. But moving on to another buzzer in trade that is in focus today, and that is Avenue Supermarts after it reported its quarterly numbers, and of course a couple of brokerage notes that are downgrading Avenue. They're trading with cuts of 3% odd. So it reported a revenue of 17.7% growth during the December quarter, as it shared during its business update, but margins narrowed further to 7.6% from 8.3% from since last year. Now, an increased intensity in the discounting in the FMCG category, increased operating expenses on the store expansion. These are some of the factors that have contributed to the lower margins for the company. Now, the same store revenue growth for the quarter stood at 8.3%. Additionally, the company's CEO, Naval Norona, has also been, he will be stepping down as the MD and CEO of the company from the 1st of February 2026. And Anshul Awasa, who's currently the country head of Unilever Thailand, will be the CEO designate as far as Avenue Supermarts is concerned. Morgan Stanley remains underweight on Avenue Supermarts and has also cut its target price for the company to 3,260 rupees per share. Another brokerage who has cut its target price for Avenue is Citi, who has slashed the target price to 3,350 rupees while maintaining its sell recommendation on the stock. Bernstein, however, maintained its outperform rating on the stock with a price target of 5,800 rupees, which is highest on the street for as far as Avenue is concerned. On the back of that, Avenue Supermart is in focus today. But coming to you, Aditya, from the FMCG pack, You have picked out HUL for us. Tell us what's on the charts for HUL. The entire FMCG basket. It hasn't really moved much. HUL. But from now on, do you see the defensives, taking charge in this market?
Oh, absolutely, Ankita, which is why I picked up an HUL. Rather, I believe IT and FMCG are going to be the two sectors which could be the hiding place where the markets are turning choppy and volatile. And within that, HUL definitely stands out for me. After good correction and consolidation, stock is now on the verge of a breakout from that narrow consolidation phase, and a sustained trade above 2450 will take the stock all the way higher to 2550 to about 2650. So that's a decent kind of an upside that I see in the stock from current levels. And if I plot a technical indicator, which is your RSI and MACD, both have entered into the bull territory, which tells me that an uptrend is likely to resume in most of the FMCG stocks, and particularly in HUL. And on the downside, 2400 about 2360 is a very good support area. So with the stop loss around 2400 to about 2360, I'll be a buyer in the stock for a target of at least on the upside, which is close to about 2600.
All right, that's HUL on the charts. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back with some more stocks that are in focus today, so stay tuned.
In association with
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus on the back of news flow and on the back of technicals. And of course, on the technicals, we have Aditya, and from our research team, we have Ria. But let's get started with all the stocks yet again. PB Fintech is the name that's in focus today. In fact, that stock is tanked 8% right now, currently trading at the lowest point of the day after Morgan Stanley downgraded the stock to an underweight call as against the previous equal weight rating. Now, the brokerage cites lower than expected profit emergence and high stock valuation as the triggers behind the downgrade. Now, according to Morgan Stanley, they've assigned a price target of 1,400 rupees per share, which translates into a downside potential of nearly 25% from the Friday's closing price. Now, the firm noted the divergent stock outperformance, which according to Morgan Stanley has factored in strong new business premium growth over 60% in the first half of FY25 for the company. Now, moving on, however, Morgan Stanley expects company stock to derate as core new business performance is likely to moderate in FY26 on the back of that downgrade coming in from Morgan Stanley with a downside of 25%. PB Fintech is now reeling under selling pressure towards the lowest point of the day with cuts of 8%. But moving on, Aditya, I'll come to you. You've picked out Oracle Financial Services. Now, if you look at the past movement of the stock, it has doubled in the last 1 year, but in the last 6 months, it has been in a consolidation mode. From here on, how do you see the stock moving? Do you see the stock moving up now?
Rather, in fact, it's the reverse, Ankita. I think there is a correction due in the stock big time because I see massive negative divergences on multiple time frame charts in today's trading session. It's broken down from a key trend line support that it was holding on to for some time now. So below 10,900, 11,000 levels, stock is going to further weaken from here on. So on the downside, I believe stock can easily test levels of 1,500 to about 9,800. So that's a decent downside that I'm looking in the stock. And when the stock, like you mentioned, had been outperforming for some time, so a correction in the stock from current levels cannot be ruled out. So I would be a seller in the stock for a target of 10,500 to about 9,800 on the downside. If you're already long in the stock, maybe it's time to book out your profits once, or maybe put a stop loss close to about 10,500. That is where close to about the 200 DM is also there for the stock. So that is the first point of support. Overall, the chart setup is weak. RSI has moved into the bear territory again, and there is a kind of a volume in the sell-off as well. So that tells me that the downside is going to continue from here on.
More downside for Oracle Financial Services on the charts. But moving on to a flyer in trade today, that's AB Capital on the back of Morgan Stanley note. Ria, take us through what the note says. And as I can see, AB Capital is also one of the top Nifty future gainers for today. But what does the note say? The stock is up 2% right now.
That's right, Ankita. So Morgan Stanley has come out with a note on AB Capital today. They've upgraded the stock to an overweight rating from their earlier equal weight rating, and the target price is now rupees 247. Now the stock has been down around 24% in the last 3 months versus a decline of around 5% for Sensex. Now Morgan Stanley has forecasted an AUM CAGR of 20% for FY24 to 27 and an EPS CAGR of 18%, resulting in ROEs of over 15% in FY27 for the NBFC business. It enjoys a strong funding access due to its parentage and has maintained asset quality reasonably well over the years. So positive view coming in from Morgan Stanley, and the stock is up around 2% as we speak.
All right, so that's AB Capital on the back of that Morgan Stanley note. But let's move on to another set of stocks that are in focus today, and they are the crude sensitives. Crude sensitive stocks like those of the oil marketers, airlines, paint, tire manufacturers, which are dependent on crude as a key input raw material, took a hit following the moves on the Brent crude oil prices. Brent crude prices have surged past $81 a barrel, hitting a 3-month high in early trade today. The rally was driven by, of course, expectations that expanded US sanctions on Russian oil producers and 183 vessels that was announced on Friday, which will disrupt Russian crude supplies to major importers like China and India. Analysts feel that the move aimed to curb the revenue that Moscow uses, to fund its war in Ukraine will severely hurt Russian oil exports to India and China, pushing the two top buyers to source oil from Middle East, Africa and America, thereby providing an upside risk to oil prices. Now, these developments have dampened sentiments for crude-sensitive companies that stand to face margin pressure as the uptick in crude prices, lift their input costs. As a consequence, we can see all the oil marketers like BPCL, HPCL, Bharat Petroleum Corp that have tanked between 1 to 6%. Their BPCL is down 3.5%. Interglobe Aviation, another stock that is affected by that, the 4.8% cut coming in there. Meanwhile, the paint and the tire manufacturers have also slipped into the red because raw material accounts for almost 55 to 60% of the input cost for paint manufacturing, directly affecting their gross margins. On the back of that, all the crude sensitive stocks are in focus today. But moving on, Aditya, you've picked out Naveen Fluorine for us. Tell us, what are you seeing on the charts for this counter?
Stock has cooled off after that sharp up move that we've seen a couple of trading sessions back. Both Naveen and then SRF had seen that kind of a rally, and Naveen, especially after cooling off, has taken support at the gap area, which is close to about 3,500 to about 3,560. So that's a key support area, and from there it's bounced back in trade today when the market is down and out. So that's a healthy sign. Looks like there's more room on the upside for the stock. So 3,700 is something that I'm eyeing on the stock closely. At current levels, there would be a buyer, Ankita, for a target of at least 3,700. Then above that, 4,200 is also something that cannot be ruled out. So 4,200 is the eventual target for me that I'll buy the stock for on the downside. So easily 3,500 is your strong support area. Plus, indicators are also suggesting that the bullishness is still intact in the stock. So I would be buying the stock at current levels for an immediate target of 3,700, and above that, 4,200 is something that I'm buying.
All right, bullish trend intact for Naveen Fluorine on the charts. But moving on, Ria, I'll come to you for Shriram Finance, which is buzzing on the back of a brokerage note. Tell us, what does the brokerage note say?
Well, yesterday, Motilal Oswal has come out with a note on Shriram Finance. They've maintained their buy rating with a target price of rupees 700, and they've also said that the company remains the top pick for 2025 in the NBFC coverage universe. Now, they've said that execution as a merged entity has been superior to its peers for Shriram Finance, and it is going to deliver a net profit CAGR of over 19% over FY24 to 27. They've also forecasted ROAs and ROEs of about 3.3% and 17% respectively for FY27. They've also highlighted that the company's valuations have already re-rated from 1.2x to 1.5x a one-year forward price to book over the last 12 months, and they see scope for further re-rating if the company is able to sustain the execution on its AUM growth, margins and credit costs as well. So they do have a positive view on the stock, but today the stock is actually reeling under some selling pressure, trading with cuts of just about 1.5%.
All right, that's Shriram Finance that was trading with gains of over 1%, has now succumbed to the selling pressure at the lowest point of the day right now. But coming to you, Aditya, you picked up Reliance for us. Now, interestingly, Reliance hasn't really done much in the last 1 year. In fact, it has, valuations for RIL has hit its COVID era lows. Is this a time for reversal now on this stock?
Like to think so, Ankita. In fact, I'm quite gung-ho on this stock. I've been advising clients to accumulate Reliance at current levels. It's more more of a positional trade rather than just a trading bet. Add the stock in your portfolio. Trading at extremely oversold levels has taken support at key moving averages on the higher time frame, weekly, monthly, and daily. Formed a base around these areas, and from here it's finding its feet. Interestingly, it's holding ground in trade today while market is correcting big time. So that's the first sign, healthy sign in the stock. At current levels, I would definitely be buyer in the stock for target of 1330, 1400 on the upside. Immediate hurdle is close to about 1260, but I think that will be taken out in a day or two if market just holds where it is and doesn't correct too much from here on. So 1400 is something that I'm eyeing on Reliance. It's more of a positional trade, like I mentioned. I've seen multiple divergences on RSI and price on time frames. So that tells me that the bearishness is going to end anytime soon, and an uptrend is going to resume in the stock. So for those reasons, I'm quite gung-ho on the stock, and I will buy rather than accumulate the stock at current levels into my portfolio.
All right, accumulate the stock at the current levels in your portfolio. That's the word of advice coming from Aditya on RIL. But Aditya, Riya, thank you so much for taking the time out and joining us. With that, we're completely out of time on this edition of Market Fatafat. Thank you so much for tuning in. I'll take your leave, but don't go anywhere because closing trades is coming up next.
If you like this video, then like, share and subscribe to ET Now.